Thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's the penultimate, in fact, the day before the long weekend, and it's also the expiry day, and it's also a day where we see a lot of result reactions. By the way, keep in mind, tech not only in India but world over was doing okay. Yields fell, and as a result of which you had some gains for the Nasdaq. Big tech did do really well in the US, and that plus ISG plus result should aid sentiment for Indian IT. And I'll come to Indian IT in a bit. It might well seem like an Indian IT dominated trade setup today, but that's the nature of the beast. As you can see, NASDAQ 105 odd points. The others also did okay, not as good as the NASDAQ, but big tech certainly did really well. So there is obviously signs of, and this obviously happened because of the movement in the yields, but there is sign of some bit of pressure around product companies facing issues because of the semiconductor shortages. I was talking about it yesterday or day before, but look at this chart, which tells you the gap between ordering a chip and the delivery now has hit a record of 21.7 weeks. A few weeks ago, we'd spoken about 18 weeks or thereabouts, and which was a record then. Now it's 21.7 weeks. That tells you a story or two. If Apple, the mighty Apple, is having issues when it comes to semiconductor or chip availability, then I'm sure others are having it too. So keep this at the back of your mind, viewers. It might disrupt um, manufacturing for select industries, including auto, for the October to December quarter as well. Okay, let's move on. So US did okay. Asia should come up on your screen next. SGX Nifty should come up on your screen next. Asia, largely a tinge of green, maybe a few ticks of red here and there, but otherwise largely a tinge of green, which is not a bad sign. And India, any which ways, has had a really decent move in the recent past. In yesterday's session too, we had a really strong move irrespective of what the world markets were doing. And we might be above 18,200. Looks like we'll start off about 0.5% higher, and that shouldn't surprise anybody. I would be surprised if indeed it stays here, if we indeed start off this well, simply because tech seems to be in a good mood today. And I'll tell you why. Actually, most of you know why, but I'll still enumerate it. One quick recap of what happened in trade yesterday. So the MOV function will come up on your screen, but 291 advancing to 208 declining. A bunch of stocks led by the Tata Group, of course, did really, really well. But aside of the Tata Group, there were others too. IndiaMart had an 8.5% up move. BHEL, a lot of talk about there could be some suitors for this one. All hotel stocks did reasonably well. Avenue Supermarts above 5,000. The market cap is above 2.5 lakh crores. And it's probably the only one at that market cap which is not in the F&O space as yet. So pretty interesting, the kind of gains that happen. Some losers, but really nothing to worry about. An odd textile name, an odd uh, real estate name, but really nothing to worry about when it comes to the gainers versus the losers. Really, the gainers hogged the limelight yesterday. Now the trade setup, I think the Nifty leg up will continue because IT will now chip in with gains today or with contributions today in a big way. And by the way, the IT rally is not just what's happened to results. ISG's uptick when it comes to guidance for select pockets, and it might help companies like in the ERD space. But that plus results plus the currency now south of 75 half, all of that adds to the IT luster. The rally in select Tata Group stocks and the PSU names may well continue. I don't think it's over. There's a lot of forwards about what will happen to Tata Motors after the 20% up move. Let's wait and watch. It showed some serious delivery-based buying yesterday, considering the quantum of trade that happened. So do watch out for some of the Tata Group stocks. And I think when I spoke to some local dealing desks yesterday, post-market hours, they're staying bullish on PSU banks in particular out of PSUs and metals as well. So let's wait and watch if that part of the market also chips in. Now, imagine what happens to the markets if, along with BFSI, IT starts contributing meaningfully or IT doesn't buckle down. That's the two biggest legs of the market looking positive, a thing or two. FII's net bought yesterday 937 crores, the first buy number after 6 consecutive selling sessions, wherein they probably sold about not nearly $1 billion, but over 6,000 crores worth of selling. So that buying was welcome, is welcome rather, and it'll be interesting to see what it seems like in the session today. A bevy of numbers slated to come out today, between today and Monday. So today we have HCL Tech, arguably post-market hours. There is Indiabulls Real Estate, which will be important. Cyient important. Century Textiles for the real estate piece important. And then on Saturday, by the way, viewers, we have DMart as well as HDFC Bank. So I think it's a packed post 3:30 p.m. earnings release calendar that we have, and therefore a bunch of reactions expected on Monday. So do watch out for those. And some stocks which are in the FNO ban and one IRCTC which is out of the ban should also be kept in mind. So more importantly, BHEL enters the ban. There is, of course, SAIL, NALCO, etc. continue to stay in the ban. So all of those in focus, but IRCTC out of the ban. So keep an eye out for this one. Now, the big ones, and I've tried to either give you the best brokerage note according to me or the summation of the earnings as I saw them. So Infosys, firstly, I'll do both here because that promises to be one of the key stocks of the day. The dollar revenue growth at 5.7% versus expectations of 5.5%. So it beat expectations there. And 5.7 is a very good number, by the way. EBIT margins are 23.55% versus expectations of 22.4%. So did well there. FY22 revenue guidance revised upwards to the band of 16.5 to 17.5 versus 14 to 16% earlier. So a bit of a beat there. Unfortunately, beat on the attrition levels as well. 20% is a very high attrition number. And I think if there is one concern around IT, it is this large attrition that we're seeing, and therefore what happens to wage costs going ahead, if at all. So that is that one piece. And I thought Morgan Stanley's note on Infosys summed all of this up very well. So I'm bringing that. The rating is overweight. The target price is 1920. They say that they find Q2 performance strong on both revenue and margins, but see softer large deal wins and rising attrition rates, plus margin headwinds in the second half as key negatives. Now, viewers, keep in mind, because Infosys did not have very large deal wins, there'll be question marks around the pace of growth in FY23 unless Infosys reverses this deal win structures or deal win numbers in the second half. But until that happens, maybe, just maybe, a bit of a lag there. No, let's stick with that piece. I think that play please for a moment. They expect the street EPS estimates to be unchanged, Morgan Stanley, and they believe that the stock's performance will be linked to the relative discount to TCS. It's trading at some bit of discount, I think 8% versus an average of 13%. So it's not that the discount is tremendous, but maybe some bit of this discount could be narrowed down. So let's wait and watch. Remember, Infosys ADR already was a giveaway. So much as all this conversation and the gyan that I'm giving you is to no avail, simply because the ADR gave you a slice of what's going to happen to the stock today. It will do well. The question is how much. And that's where I thought the Morgan Stanley note was important. Before I come to the relative performance differentials, let me quickly sum up what Wipro did as well. Dollar revenue was up 6.85% versus estimated 6.5%. Constant currency revenue 8.1% versus estimated 7%. EBIT margin 17.8% versus estimated 16.9%. And the Q3 guidance was largely in line with estimates at about 2 to 4%. The key, viewers, is this: the relative performance of TCS, Infosys, Wipro, and HCL Tech over 1 month and over 6 months. This is the 1 month performance, and TCS is negative about 5%, Wipro marginally positive, HCL Tech just about 4%, and Infosys about 3%. So that's the nature of the beast. This is the 1 month performance. If you look at the 6 month performance as well, you will see that TCS has largely underperformed Wipro, to an extent even Infosys and HCL Tech. And therefore, the question is the extent of the outperformance that an Infosys can show, even if it wants to narrow down the gap between itself and TCS multiples. There is a bit of a gap, so some of that might happen. I don't know if it's a sustained move possible. By the way, these two are not the only one. Macquarie, Mindtree came out with numbers, and I thought the Macquarie note was summed it up well. So I've got some excerpts from there. Their rating is underperformed, so I'm not commenting on whether it's an underperform or outperform. They've raised the target price to 3,900, but the rationale that they've given, that the Q2 FY22 revenues exceeded consensus estimates, led primarily by retail, CPG, and the manufacturing vertical. The efforts to improve client metrics continue with growth in large accounts, which is a big thing for Mindtree, by the way. Macquarie raises FY22 and 24 EPS by 5 to 7%, but they retained underperform on valuations. It's a very expensive stock. It may do well today because the earnings were very, very good and some of the internals were good, but Mindtree is extremely expensive, so be mindful of that. So viewers, this is net why IT promises to be the big day today. Good results, not bad commentary. The only problem is the valuation and the attrition levels. So maybe the upsides are capped, but upsides there will be today, and that will aid the Nifty for sure. By the way, HCL Tech comes out post-market hours today, so that is something that will be watched out for as well. I would reckon there will be some positive reaction even for HCL Tech, despite the weakness ahead of the numbers, which leads one to believe that maybe there could be a chink in the armor for HCL Tech. Let's wait and watch. Nalco and Hindalco. Nalco is in the FNO ban, but Alcoa earnings today evening could well impact stock prices. What I mean by tomorrow is Monday, by the way. Tomorrow the markets are shut. But yeah, watch out for Nalco and Hindalco. Could be very interesting in anticipation of what Alcoa does. Remember, for the last 5 quarters, they've beaten estimates. The market would want to believe that with the aluminum prices doing what they are doing, there'll be a good set of numbers, and therefore the reactions on Nalco and Hindalco would be positive on Monday. Do watch out for these. Z and Dish TV remain in focus. Dish TV said that they can call the EGM. Z Reliance made a filing, and then Z made a filing saying that Invesco's submissions were misleading. So this whole drama continues. It may have a bit of an impact on stock prices. Really, I don't know, but yeah, both of these stocks remain in focus. Westlife, I thought, was interesting in the premier consumption name, so to say, when it comes to fast food, and they've said that they look to add another 150 to 200 stores in the next 3 to 4 years. The store addition guidance, therefore, is higher than the recently revised guidance of 30 to 40 stores per annum beyond FY22. Because if you look at 30 to 40 for the next 3 years, that's about what, 90 or 120 or thereabouts. The band that Westlife has given is 150 to 200, so therefore they're becoming a bit more aggressive. Obviously, they must be seeing some opportunities, and this should augur well for Westlife. So do watch out for this. Last but not the least, viewers, I leave you with comments that I saw on the CNBC website, CNBC Global website, wherein they have quoted Vladimir Putin as responding to whether oil can hit $100 per barrel or no. And he said apparently that this is quite possible. That is quite possible that oil could hit $100 a barrel. And then he's been quoted as saying that Russia and our partners and the OPEC Plus group are doing everything possible to make sure the oil market stabilizes. They are trying not to allow any sharp peaks in prices. They certainly do not want to have that. It is not in their interest, is what he's been quoted as saying. But the point being, one of the premier oil producers says that oil at 100 is quite possible. Brings me back to the point. Oil prices, if they stay buoyant, gas prices, if the way they've been revised, all of that should augur well for oil upstream. So don't let that go out of your sight. JP Morgan has consistently reminded that the prices of companies like ONGC, for example, do not price in the oil prices at the current levels. You got to watch out for what happens to some of the upstream names. Thanks so much for tuning in today, viewers, to the trade setup. Have a safe, profitable day ahead. Watch out for PSU banks, watch out for metals, and watch out for IT for sure in the session today. The only question that you got to ask yourself is there merit or is there juice left in IT after the bump up start that you'll most likely see this morning?